Hello everybody, in this video I'm going to be doing a brief stock analysis on BP, and this is not so much going to be a deep dive into their financials, but more so me talking about the company a little bit and giving the outlook for the industry. I like to start off by taking a look at their 5-year chart. So if you look at pre-COVID time or before March of this year, it really looks like a slow growth stock, starting at about $35 5 years ago, growing up to almost $50, and it did surpass $50 at a couple of times. And then if you look at the stock year to date, so we just saw the stock today at 1625 or 1622, whatever it was. And at the worst time in March, on March 18th, it was at 1611. So it's back to its worst time ever right now in the market. So could be a potentially good spot to buy into it at. And then if we look at revenue and earnings for the last 4 years, it looks really, really great from 2016 to 2018, and then a dip in revenue and earnings in 2019. And then if we look at 2020, it's not so cute. You see slight negative earnings in Q1 of 2020, actually slight negative in Q4 of 2019 as well, which is not good because there's still a huge demand for oil. And then you see a huge slump in Q2 of 2020, which you will also see in Q3 of 2020 as well as a huge decrease in revenue, seeing $70 billion in Q4 of 2019, and then just $30 billion of revenue in Q2 of 2020, which could potentially mean they're going to be in trouble if this does continue for the next 3, 4, maybe 5 quarters. And then there's also just 3 metrics I wanted to point out here. It's that our market cap is $54 billion right now, which is really surprising because British Petroleum is traditionally over $100 billion company. And then their 1-year target estimate, I usually don't pay much attention to this, but it actually looks pretty good to me. It's just below $30. And keep that in mind. You're not going to be seeing a great return on this in just a few months or even half a year. You're probably going to have to hold this for an entire year just to see double your investment, so do keep that in mind. But it does have a really good dividend. You see on that 3rd check mark there that it has about an 8% dividend right now, which is pretty good. You're actually seeing close to Exxon's dividend, which has the best dividend in the industry, I do believe, unless you want to go look at some of those really small companies, which I'm not interested in at all. But yeah, $1.26 dividend right now is really great. And now I want to talk about a few points by the bulls and the bears by analysts at Morningstar here on the Robinhood app. And the first one is that with a growth production rate of 5% per year through 2021, they have the fastest growth rate in their class, which is good. But even if they say a 5% growth rate in the next year, it's really not going to help them just because the demand's not there for their product right now. And gas is super, super cheap just because there is no demand. So it's not going to really matter if they are able to produce more. But that is still a really good bullish point long term. The next point is that BP reached a settlement with the US and the Gulf states in 2016 from the BP oil spill, which I'm sure you'll probably remember, which is extremely valuable because there was a little bit of speculation that the Gulf states or the US were going to try and bankrupt BP basically because as a result of the oil spill and the damages, but that's not happening. They're just going to have their liabilities that they're going to have to pay over time. And then the last point is that BP had made great strides in high grading its portfolio and reducing its cost to about $50 a barrel within the next year. Reducing its cost so that its break even is about $50 a barrel, which is currently a lot less than $50 a barrel, but I'm sure we'll get back up to there in the next 2, maybe 3 quarters. We'll have to see how it goes. And next up, I wanted to talk about a few bearish points by analysts at Morningstar before talking about more of an overarching bearish point of my own. But the first one here is that BP has more political risk than their peers because a lot of their reserves, over a third of their reserves, come from the Russian oil company Rosneft, which is not very highly looked upon by the European or US buyers. And then the next point is with a relatively small downstream and chemical asset base, so the chemicals needed to put in the oil, they have less ability to capitalize on the falling oil prices, so they're not going to be able to store that oil and then sell it at a later date when oil prices are much better. So they're just going to have to go ahead and sell their oil after they take it out of the ground because there's not much they can do with it, and they're not able to capitalize on the really low and falling oil prices. They're just having to sell it for what it's worth right now. And then the last point is that the majority of their new volumes are going to be natural gas within the next 5 years, which is going to reduce their oil leverage, which traditional oil is kind of falling right now, whereas natural gas is doing really well. So it's going to reduce their oil leverage to 55% in the 5-year span. And next up, I actually wanted to talk about an ETF called JETS. So I invested in JETS in March and April at about $13 a share. And JETS is an ETF that invests in airlines, but it kind of goes hand in hand with oil companies. They're really following the same kind of prices and trends. And the point I wanted to make here is that I invested at about $13.50, and right now it's at about $17.50. And I thought I was going to be seeing a much better return here, but I'm still going to be holding it for quite a while, it looks like. So the point I'm trying to make is, even if you do want to invest in BP, just know that you're probably going to have to hold it for quite a while. Think a year or maybe even longer to see a great return. And even then, you're probably not going to see a great return, just possibly close to doubling it with collecting the dividends along the way. So don't underestimate COVID and the effects of the stock on the stock market like I did. It's probably going to be affecting leisure and travel and leisure companies for a long time to come. And next up, I wanted to show their research report overview, which I thought was pretty insane, that they gave a 5 out of 5 stars. And their point here is BP tightens capital discipline and cuts costs as oil prices slide. And they're not doing that as some kind of great thing and some kind of great restructure. It's because they're having to. They're having to cut costs because they're selling oil for less than what they're getting out of the ground for. But they have a narrow economic moat, which is true. I really couldn't say. I don't even know why they have a narrow economic moat. They're not doing much that their peers aren't. Fair value, $40. Not true for the current time with oil prices being what they are and the outlook for the next several months being so bad. Uncertainty is high, which is true, so I'm not sure why it has 5 stars. And normally I'm actually arguing the opposite on some of these tech stocks where it has 1 or 2 stars just because the valuation is so bad. And then stewardship is standard, which I guess is true. I don't know much about their top management. But yeah, to summarize, pretty surprised to see 5 stars with oil prices being so low, as well as travel and leisure as just overall being so grim looking at the next few quarters. I make tons of other brief stock analysis videos very similar to this one, so be sure to come and check that out if you did enjoy. Subscribe for more content, and thank you so much for watching to the very end.